So I'm gonna just do a quick video to update y'all on what Brother J Pow said yesterday at Jackson Hole and what that could mean for markets and basically how he set the tone straight. So for the past couple months, well, let's get to what he said. Yesterday he said that basically the Fed was going to remain restrictive. They were going that he talked about inflation possibly becoming entrenched. He talked about inflation being volatile. He also said something to the effect of there will be pain for households and businesses, and never ever heard him say nothing like that. He don't even speak in that kind of tone. You feel what I'm saying? But I've only been keeping track on for like the past year and a half. So it was very unusual for me to see him come out, talk and dip. Usually he talking, elaborating, answering questions. He didn't do that at Jackson Hole because he already knew that the market had been misinterpreting what he's been saying and flipping it, trying to be dovish, right? At the July FOMC, the market been rallying the past couple months because it believed that the Fed was pivoting, and it became like a big thing after the July FOMC. The Fed did not pivot, and I've been saying consistently that the Fed did not pivot. July 31st, the market had an insane rally after FOMC because it's pricing in rate cuts at the beginning of 2023. Here's a Fed member's thoughts. The rally is running off a paper-thin foundation, in my opinion. I've been saying that since it even bounced in June, and I've been saying that since this bounce. Because even at June, there was this theory that they were going to flip. Nobody was ever flipping dovish. Never happened. So I think Brother J Pow realized that the market misinterpreted what he was saying in July and came out and set the tone straight at FOMC or at Jackson Hole yesterday. So yesterday he set the tone straight. Gonna be pain for businesses and households. The same stuff I've been telling y'all since January. The market just follows Fed policy. They are raising rates and running off the balance sheet. And starting in September, they doubled the pace of running off the balance sheet. Please tell me how in the world that ever becomes bullish. There's never been a time in history where they have ran off the balance sheet and raised rates at the same time. So if you're bullish long term, you have to be psychotic. That's just my belief. But of course, once the pivot does come, then we can start to build a bullish thesis. But until that point comes, I cannot be bullish on stocks. Fed pivots, I'll let y'all know. But I can't see that being but sometime in the very distant future. Inflation has to come down. They can't pivot until inflation comes down. So that's just the market long-term fundamental overview, how I feel about it, how I've stood on my stance since last year. Inflation, I told y'all inflation is going to be out of control. It's gotten out of control. Now the Fed is basically getting out of control. So we got to deal with an out of control Fed who is trying to make up for his mistakes. But that happens. I ain't blame them or nothing. But market's going to pay. They're going to pay a lot. And there you go. That's the update. I would say nothing has changed. And 6 months from now, 12 months from now, things will probably be worse, as I've said in a previous video. So that's the update. Hope you enjoy. And I'll make another video soon for sure, talking about this stuff more. So you guys, I'll catch y'all for the next one.